Hey, what's up, guys? It's Online Money 24/7, and today we're going to be talking about how to find a great stock investment in under 1 hour. So these are the steps that you're going to want to go through in order to find your next good stock investment, and the way that I do it and how you guys could do it as well. So the first step is to have that idea spark, that first initial thought of, is this a company I want to invest into? And the way that that could come about is maybe you get a new phone, you see someone else with a new phone. Maybe you start a new subscription service that you're subscribed to. Or maybe you find that nice little soda drink that you start liking, or you see other people drinking and you're like, what is that soda? What is this phone? What is this Netflix subscription? Or, some sort of things along those lines. I'm not trying to specifically choose any company, because it could be any company for this idea spark. But these are just some examples here that I have laid out of things that you might come into your life at some point, whether you go to the grocery store, you see someone using some sort of new product, some sort of idea spark that gets you thinking, maybe I want to invest in that company. It seems like they're doing pretty good. A lot of people have been using their service or their app or their company or whatever. Maybe I should invest into them. So the first step to actually get started is to Google if they are a public company, because there are two types of companies. There are private companies and public companies. Public companies are the ones that are traded on the stock market, and that is what you'll be able to invest into. Unless you have some sort of connection to the company, you will not. And if they're a private company, unless you have some sort of connection to them, you won't be able to invest in them directly. So if you're going to invest into a company through the stock market, it would need to be a publicly traded company. But most companies are public, but you have to definitely double check. Some smaller companies are private. Even some big companies are still private companies. They just aren't public to the open market and on the stock market. So that's the first thing you need to look, and make sure that the company is publicly traded so you can actually purchase into the stocks in the first place. So if they are public, then good. It's a green check mark and you're good to go. And so the next step is to then look at the business. This is something that's going to take quite a bit of time to actually do, but it's one of the most important steps. So, you're going to be searching, you're going to be Googling, you're going to be taking a look at the business. What are they? What do they do? What do they sell? What kind of products or services do they offer? What's the whole scope of the business? How long have they been in business for? How long have they been on the stock market for? All those kind of things. You're going to want to be looking at the business to see, okay, what is the track record? What's the history? And then secondly to that, to understanding just the business that you want to invest into, first, of course, look at the business you're trying to invest into. Secondly is to analyze the marketplace. So you're going to want to look at what other businesses are out there roaming around in the green grass of the stock market land, of the traded companies. What other companies are out there within that marketplace that may be competition? They may work with them directly. Look at those relationships that are between different companies and see, what does the marketplace look like? For example, if you had Coca-Cola, you're definitely going to want to take a look at Pepsi as well if you're going to be investing in Coca-Cola, because Pepsi is essentially a direct competitor to them. That's just an easy example right there. The next thing to do within the marketplace is look at what sector. I think this says stock market sectors, but it breaks down here in this chart. You can see what type of stock market sector your company is in. So if I was talking about Coca-Cola or Pepsi, that would be like a consumer good, is a Coca-Cola or Pepsi drink. Or if you're going to be taking a look at the Chase as a bank to invest into that bank, that would be in the financial sector or the banking sector. If you're looking at Snapchat or Facebook, that'd be in the technology sector. So there's a lot of different sectors that different companies can be broken down into. And it's also important to look at what kind of trends are going on within that stock market sector, along from just their competitors in the marketplace and seeing where the trends are going for that company, but also looking at the whole sector as a whole in the market, in the stock market. So that's definitely another important thing to look at. And then next, you're going to look at the financials. This is the thing you want to look at after you look at the marketplace and really understanding what the business model is and what are the competitors, what is going on within that sector. So then next, you're going to want to take a look at the financials. This is the next step. First, you're going to want to see the profits. What kind of profits is this company bringing in per quarter? You can take a look at the quarterly reports on your stock market app whether that be Robinhood or maybe just a stock tracker app that you find off of the internet. Maybe it's Google you use. You can take a look at those quarterly profit reports and really understand, are they a profitable company? Are they losing money? Because they're, just because a company may be negative in the hole, like Tesla is very in the hole in terms of their development, but they're a massively traded company. Same with Amazon as well. I think Amazon's actually still negative in their overall financials, but they're a massive company. So it just because they're negative and they're not specifically a profitable company doesn't necessarily mean that they're a bad company to invest in if you see them as a growth company for the future. That's how a lot of growth stocks are, such as an Amazon or a Tesla, is a lot of them are not going to be super profitable companies, at least right now, if you're looking into different growth stocks. The next aspect of financial ratios that you're going to be looking at is the P to E ratio. So this is the current price of a stock divided by the company's earnings per share. Now, this is the lower the PE ratio, typically the better. Generally under a 17, 16 is really a pretty solid PE ratio, but it's not necessarily a deal breaker, and it's also only one small aspect of a stock. So don't get caught up too much on the P to E ratios. I know a lot of people talk about them as if it's like a massive thing, and it's important to take a look at within a company if you're going to be looking at like a bigger company for the long-term growth type stock. Some of the bigger stocks like an Amazon or a Tesla, they don't even have like a PE ratio on some of them because they're so massive. So it's not necessarily the deal breaker there, but it is something that you can consider when you're looking at a stock, and it is in the financial aspect of the stock that you're looking at. And ultimately, the biggest thing that you're going to be looking at when you're taking a look at investing in a new stock is the big picture. This is the thing that I utilize the most when I'm looking into different companies to invest into, because ultimately you take a look at the financials, you take a look at the marketplace, and you understand all of these different aspects. The big picture, putting all of it together, is the deal breaker there at the end. Do you see an actual future in this company? Because the financials may be in some regard, some way. The marketplace may look a certain way on certain days. Like if you look at the big picture and analyze, do I see an actual future in this company? Do I see a future in Coca-Cola? Do I see a future in McDonald's or something? I'm just using those as easy examples, but it could be any company. If you see a future in them and the marketplace is growing and they're doing well, then invest into them. But, don't get caught up too much on the specific numbers, because sometimes that might throw you out of investing into a stock if you're like, oh, it doesn't fit this exact criteria. Sometimes you have to have a little bit of wiggle room with when you're investing and be like, okay, look, sure, this might not be great. This might not be an amazing ratio here with these numbers, but I think I see a great future in this company, and that would be the good decision maker to be like, okay, I'm actually going to invest in this company now. I really see a good future in this space, in this tech space or whatever sector that your company is in. Once you really understand the whole picture and you understand everything about the company and you have a good circle of competence, then you can decide, all right, am I going to invest? And you want to get that full big picture first, and once you have that decided, there you go. Then you can make that decision if you want to actually invest into the company. And this can all be done, in under an hour, at least looking at the initial data. Definitely take some time to let that idea of investing into a company sit and resonate with you for a bit. But I'm just saying the research aspect could be done within an hour. It's not too crazy, but you definitely want to have some competence built up within a company before you start throwing money at them in your stock market app. And speaking of stock market apps, if you guys do not have one, I recommend Robinhood. Now, it's a free stock trading app, no commissions on trades. That's what I personally use, and if you click the link down in the description box below, it does support the channel, so if you want to help out the channel, I think you get a free stock as well. So if you want to support the channel, go ahead, click that link, sign up for Robinhood. It's awesome. That's what I personally use. And guys, if you have not subscribed to the dang channel, what the heck are you doing? Subscribe to the dang channel so you get notified for future videos and uploads and notifications and all that good stuff. Leave a like, comment down below if you have any questions, comments, concerns. Anyway, guys, that's all for today's video, so I'll see you in the next one. Peace out.